Hi there, and welcome to the Investment Center for video number 2. And this one is all about bonds. Now, let me be very clear. You can get corporate bonds, but what we're doing in the game, or at least to begin the game, is we're only going to be dealing with government bonds. Okay, so government bonds are the name of the game. If you decide, again, through your own research, that you want to incorporate things called corporate bonds into the game, then we could probably do that at some point. But let's start with government bonds. So what are government bonds? Okay, all governments around the world are spending money, okay? Government spending or government expenditure. Where do they get this money from? Well, a lot of the money is clearly collected from taxes, what we call tax revenue. So in the UK, for example, we have income tax, corporation tax, value-added tax, a whole load of taxes. However, it's very, very common for governments to frequently spend more money on things like the NHS and healthcare, spend more money than they make in tax revenue. There's like a shortfall, or in economics, we call it the budget deficit. Okay, there's a deficit, there's a hole. We spent more money than our outgoings are more than our incomings. So where does that money come from, the money to make up the shortfall? Well, there are a number of different ways that governments can kind of get loans, get money, but the main way, and the way that we should talk about in terms of bonds is they sell bonds to people, to banks, to firms. Okay, now what's a bond? A bond is basically just a promise. It's a promise that the government will pay you back over time. So, to give you an example, the classic kind of the standard kind of bond that you might buy is about £10,000. So just to go back slightly, where does that £10,000 go? It goes, let's say I've bought the bond, it goes from Mr. V's bank account to the government. And then the government can use that money to spend for the NHS or on state education or for pensions or anything else like that. So why did I do that? Why would I give the government my money? I didn't do it for benevolent reasons. I did it for investment purposes. I did it to make money. So how am I making money by this? Okay, this money is going it's gone from Mr. V's pocket to the government's bank account. So how am I making money? Well, the idea of a bond is that the government promises to pay me back that money over time, plus interest, okay? Plus some level of interest. And that level of interest is called the bond yield. Governments can't set the bond yield. The market sets the bond yield. And what we mean by that is it's kind of the intersection between the demand and the supply. So how many people out there want to buy a bond and how much money the government needs to raise. So if there's very, very high demand, if lots of people want a bond, okay, but the government doesn't need a lot of money, then actually the bond yield doesn't need to be very high because the government doesn't, or rather, the bond yield doesn't need to be that attractive for people to buy it. Whereas on the other hand, if the government needs a lot of money and there's not very many people willing to buy the bond, then the bond yield has to be incredibly high because it needs to attract people, it needs to incentivize people. So what are you aiming to do on the game? Well, in the game, what you have the option of buying UK government bonds. And just as a kind of a terminology point, UK government bonds in the real world are called gilts. Okay, I say in the real world, if you go and search UK bonds, it'll come back as gilts. So the two terms are anonymous. So for the UK bonds are called gilts. You could also buy US government bonds, and they're called T-bills or treasury bills. Okay. Or you could buy German bonds, German government bonds, and they're called Bunds, as you might imagine. So what's the difference between them? Well, there's no difference in terms of this process happening. You're essentially giving those governments money, and then they can do whatever they want with the money. on the promise that they will return it back to you with interest over time. All I would say with bonds is that this is kind of the least sexy way of investing. People don't day trade in bonds. People do this for the long term. Okay, this is a very low risk investment because these bonds pay off kind of over a 10-year period normally. So you get your £10,000 back plus the interest, but over 10 years. In the game, what we will do is we will allow you to buy the bond, and we will take the bond yield as it is on that day. And if you only buy the bond for 5 days, we will give you 5 days worth of whatever the bond yield is. So let me give you an example. If the bond yield on the day that you buy it is 2%, then we will divide 2 by 365, times it by 5, and that gives you the percentage of 2% that you can have increasing to your money. Now, if you're kind of doing that in your head very quickly, you'll see that actually that's not a huge amount of money. No, I totally agree. People don't buy bonds to make huge amounts of money. People buy bonds to keep their money safe. It's a low risk, but also low reward investment. Do I think you should be buying bonds? Given the nature of the game, this is a fast-paced game. You're probably, I would say that probably no more than about 20% of your investment portfolio should be in bonds. But you might want to keep 20% of your portfolio in bonds so that if all the other investments go badly, at least this one won't. And at least you won't lose all your money. A really good website to check out for bonds is the FT, the Financial Times. If you type in Financial Times 10-year bond spreads, that will give you the list of all government bonds that you can buy and their current market rate bond yield. What you're going to find, though, is that interest rates or bond yields on these bonds are incredibly low. So I haven't looked at it today, but I would imagine the USA T-bills are probably about 2.5%. The UK probably more something like 1%. And again, I'm guessing here. Okay, Germany might be as low as 0, or it might even be negative. Okay, I would have to check. Now, those values mean exactly what you think they mean. There's not a lot of return here. For investment purposes, you're not going to see a huge return. You're not going to grow your money enormously in a very short amount of time. Instead, you're going to see relatively low, steady growth. If you invest in Germany and these numbers are correct, you won't see any growth, and you might even lose a tiny bit of money. Okay, we're living in a little bit of an anomaly at the moment where there's a lot of places where you don't want to keep your money. Government bonds are seen as a very, very safe form of investment right now, when there's a whole load of other places which are seen as very, very unsafe and very, very uncertain. And therefore, the bond yields can be quite low because they don't really need to attract people because people are happy to buy the bonds anyway. To the extent that some people are prepared to guarantee themselves small losses just because they figure that the certainty of a small loss is better than the uncertainty of a potential big loss. Something to think about. Bonds and bond investment is not terribly sexy. It never grabs the headlines of investments. But in terms of your investment portfolio, you perhaps shouldn't overlook it because this is the strong, steady, reliable investment that isn't really going to get you lots, but it's not going to catastrophically kill your portfolio either. Okay, hope that makes sense. Tune into the next video.